Hello traders and investors. This is a long form analysis for YouTube. Let's begin with the overall situation. The overall situation is that Bitcoin is moving lower in 5 waves. Since October 6th, we already have wave 1, 2, and 3 complete. Bitcoin is consolidating in a wave 4, and this rectangle formation is indicative of a wave 4. The issue I see here in this rectangle is that it is vulnerable. There are a lot of stop losses located just above the range high, and for this reason I expect a deviation above the range high before a continuation lower to the range low. Now let's go over and analyze this range in detail. So far what we have is an ABC, meaning first move up, which concluded on December 10, let's say, was a wave A. Wave B completed on December 18th, and we are currently in the final stage of a wave C. Now, the target for this wave C is 96.5, at least 96.5, but it could go higher, even as high as 98K. However, I don't consider it as a breakout. I consider the deviation above the range high and the push back inside the range as a short trigger. I am looking for a short trade. To confirm a short trade, what I would like to see on the lower time frame, such as the 4-hour, is a bearish divergence, meaning that the price makes a higher high, but the volume and the momentum indicator make a lower high, and a rejection. For example, the price deviates above the range high and gets rejected with a bearish engulfing candle or a dark cloud cover. What could invalidate the bearish bias? A breakout. What is a breakout? Let's say that the price breaks out above the range high, then in the following day it is consolidating above the range high and testing it as resistance, and on the third day we see a push higher above the previous green candle. It constitutes as a breakout, and in that case my short-term bias, a bearish bias, is invalidated. Another thing that could invalidate this uh, expectation of lower prices is a rectangle shortfall. What is a rectangle shortfall? It is a situation in which the price gets rejected from the range high, but even though it was rejected, the buyers step up and buy the asset even though it's below resistance, and they push the price higher. So after a shortfall, if the price pushes higher and consolidates under the conditions I've mentioned, then it also invalidates the bearish bias. Now, just one scenario that I want to discuss, because we are in a wave 4, and waves 4 are long and exhausting. What we have so far is an ABC, but you should be mentally prepared for a continuation of this consolidation. For example, this whole ABC will be the first zigzag, then we will see a move lower in a wave X, and then a continuation of this consolidation pattern, okay, all the way to create another ABC, and only then will we see the push lower in wave 5. Regardless, until I can see a breakout from this rectangle, I am expecting this thesis to fulfill itself. 5 waves to the downside to around 77K, and after that a prolonged recovery period and a push to much higher prices, possibly as high as 108K. That's all I have for you on Bitcoin. I hope it helps, and I will see you in the next video.